Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and welcome to our live weekly update where we fill you in on everything that's going on in the markets, what's going on with obviously the pandemic that's affecting everything, and some news in general. Today, we're going to be covering off some tax tips to start to consider. You know, a lot of people wait till the end of the year or even to the new year, start thinking about taxes. But there's a lot of things that we should probably turn our thoughts to ahead of time. So we'll dive into a bit of that. Of course, perfect timing with the release or the report on Trump's taxes down in the U.S., which has got more people up in arms, but probably not much going to happen on that front. His supporter base seems to ignore all those things. So good reading, I guess, but probably not any effect on his campaign. So as always, before we get started here, remember everything we discuss on these videos and any of our other videos is really information purposes, trying to keep you up to date as much as possible. Information is changing on the fly, so always double check everything before proceeding with any advice or any strategy, and always seek professional advice or do your own due diligence before proceeding. Don't take any of this as recommendation for your situation, because everyone's different, and it's really important to make sure you take a look at your situation. As always, your video and audio are muted, so feel free to move around and watch this. If you have any questions, though, you do have that Q&A button. You can just click on there and then type them in through to us. If you want to ask something of a more personal note, by all means, go to mikeonmoney.com, where you can reach us either email, phone, book an appointment. All our social media channels are there, as well as all our other videos you can access through there. If you're watching this on the replay, same idea. Just go to mikeonmoney.com. You can access everything from there. So let's dive into what's going on. So this week we're keeping an eye on, actually I think it's this afternoon, we're going to see the consumer price confidence index for September coming out. Probably going to see a slight increase there, and also the home price index coming out for the July numbers. Probably a slight increase there from previous months and growth year over year. And that's been pretty much what we've seen down, or so we're waiting for the US numbers, but it's pretty much what we've seen here in Canada as well, is the housing market mostly driven by those lower interest rates. Remember, interest rates are effectively almost zero these days. So keeping people in the market, a lot of people, you know, bigger trend, especially with older generations, really making a shift in lifestyle. I was talking to a real estate expert up in Whistler, and another one kind of in the Kelowna and Kootenays area, and a lot of people moving from the, you know, deciding to sell the house in the Lower Mainland and go for, you know, that quieter lifestyle. Maybe it's something they'd been considering for a long time. And this has just been a bit of the push for them, or maybe a lot of people that are thinking of, you know, hey, this has been crazy. I you know, I don't want to go through this again or keep going through this. I'm going to step out, you know, of the daily hustle and bustle and get to a more quiet area. So really interesting as we see that happening. Actually, really interested if you are thinking about that. Fire us an email. I'd like to get more input as to what people are thinking as far as that housing goes, whether it's something that they've had on their plate for a while and now it's you know, just seems like good timing, or is it something you're considering now that you really hadn't considered before, and something new that you're building into your plan. Obviously, we like to keep track of those trends as we can help people along the way, but also helps us advise people as they start to look at the longer term plans. So let's look at the virus. Obviously, you know, the almost surreal news is we've passed the 1 million mark on the total death toll globally. It's hard to imagine, you know, I mentioned this before when we started to do these videos at the beginning of all this in March. I remember having the conversation while I was preparing the deck for for our weekly update. Remember having the conversation of being, just shocked that we were approaching the 200,000 number, and now we're at 1 million. So with the US over 200,000 now. So it continues on. Obviously, it's the big concern we keep on talking about is the second wave. Obviously, the Crown speech, we heard Trudeau mention, the throne speech, Trudeau mentioned he feels that Canada is into its second wave. Obviously, Quebec, I follow that really closely. I have a son in Montreal studying at university. They've just gone back to what they call phase red or code red, where they've locked down all the restaurants, bars, takeout only, basically. What we saw across the country earlier, they've gone back to that just yesterday. They're not even allowed to visit people in their homes. The group of 6 is gone. It's basically, keep to yourself. Back east. So are we headed that way in other provinces? It's hard to tell. Ontario seems to be doing a little bit better. BC, our numbers are obviously going up, but the hospitalization rate and the death rates in BC are still holding low. So that's very positive. On the flip side, we got Florida, who just lifted all restrictions. They're just back to normal. No mask requirements, nothing. So obviously a lot of concerns around that, given no vaccine yet, and certainly all legitimate reports of the vaccines won't be until mid next year, potentially third quarter of next year, for general distribution. Not to say one might not be available for emergency use, but for general distribution, not all experts are pointing into next year. As we've been talking about, we've talked about, bankruptcies in companies. Retail has been really hit hard. Obviously a record year for the first half in the United States as far as retail bankruptcies go. This is something we see probably accelerating as the stimulus packages run out. Right? So the stimulus packages kind of kept some companies going for a little while. And those are winding down. Canada, obviously, again, with the throne speech, they were running down for the companies and the individuals. CERB's winding up here, moving into normal unemployment for anyone who's still drawn from the CERB benefits. And company-wise, the wage subsidies and things have been extended, definitely to December. And talks of into next summer because of the potential second wave. So we'll have to see how that progresses. As I mentioned, constantly new news. Again, in Quebec, that when they shut down yesterday, they did say they were going to do something to try to help the businesses that have to shut down, but they haven't said what or how much. So still developing as the situation changes. Manhattan offices, New York, which was really hard hit. There's a lot of empty space. We're going to see this everywhere. The office space probably globally is not going to recover anytime quickly as companies that send more and more people to work at home, requiring less space. And what we are seeing a surge in the economy is smaller companies starting up in new areas, whether it be technology or just different ways of doing things. We've talked about the big gyms closing down and reopening kind of an online formats. Retail space obviously downsizing, restaurants downsizing. So there's a lot of commercial space that's going to be opened up here, and probably a while before we see that space being picked up as smaller companies operate not just in smaller space, but a lot of them just working from home. It's a trend that had been moving for a while, and obviously this pushing that trend even further. So Manhattan and New York seeing some pretty bad numbers after they were really hard hit. The dollar regains a little bit of appeal in some trades in the U.S. We'll talk about that when we get into the foreign currencies. Gold hit moving back up again as people get a little more negative on the longer term outlook of the US dollar. We've been talking about that with inflation rearing its head, and as I mentioned, we're going to see the consumer confidence index coming out in September, so that'll give us a bit more insight onto the inflation numbers. Eurozone businesses a little bit more upbeat. Brexit talks are going a little bit, or have been moving along. I won't say a little bit better than expected, because it's not better than expected, but it is moving along. We are seeing some advancement there, so a little bit more positivity in that area. And back to New York, seeking some private funding to help cover the cost of the election. Manning those booths, having the booth set up, making sure voters can get their vote in a reasonable amount of time. So that's a sad statement for a city the size of New York and a country like the US, where they have to look at private funding to fund their elections. Also, elections, of course, we mentioned the provincial election coming up here in BC. Luckily ours it's going to be really quick and hopefully painless. October 26th. I've already put in for my mail-in ballot. It's pretty easy. If you have your driver's license or your social insurance number, you can just put in for that. You just go to Elections BC webpage and you can click on the button. So recommend, if you want to do that, go ahead. And we did avert in Canada having a federal election, which was close, with the NDP back in the Liberals temporarily anyway. Because I don't think any of us can take another election this year. With just so much going on with the U.S. Anyway, let's talk about what we see out there. Tight inventory set to stage a rebound potential for the U.S. automakers. So, of course, when we went into shutdown, people stopped buying cars, right? People weren't going to the showrooms. People weren't even leaving their houses. I joked about when oil got really, really cheap and gas prices fell. I basically in almost 3 months, I didn't fill up a tank of gas in my car anyway. I think my family might have done in the second car, but mine I didn't take out. So a lot of people weren't out buying cars, and plants shut down, right? So car manufacturing plants closed. As they sent workers home, and concerns over COVID grew. So now that people are back and there's this pent-up demand on cars, there's no inventory or very low inventories. So car manufacturers are actually scrambling to try to meet the dealership demands to get inventories into their hands. So good for the auto industry. Maybe not as many deals on cars that we might have seen. Of course, as we ramp up here to the election, I can't remember the last count I saw was 35 days till the U.S. election. And of course, tonight is the first Trump-Biden debate, which should be a spectacular event if you like comedy. I shouldn't criticize. I just think it's going to be a lot of back and forth, and probably not very productive. But I'm sure that the late night pundits will really enjoy it. And what we're seeing investors is really try to pick a side and see, what markets or what in the markets are going to do better, depending on who wins. So the Trump trade, if he stays in the office, obviously the same type of companies that have been doing well, or the same type of markets that we've seen, and then if Biden gets in, what basket of stocks is going to do better under Biden, and that's traditionally what we see with a U.S. election. It's not necessarily that the markets prefer, as far as the markets going up or down, it's really not a preference as to whether they have the Republicans or the Democrats in power. It really comes down to the philosophy. So the easy trades are generally, if Republican gets in, anything military does better, and if the Democrats get in, healthcare usually does better. So that's very broad. Obviously, there's a lot more that goes into that, and different things you have to look at, especially with the current situation. But we're starting to see the market really start to analyze those two sides as we get closer and closer to election day. Sell the day and go away. So as we've talked about over the last couple of weeks, we have seen some weakness into the markets. Normally what happens in market trading is you get the momentum in the morning. So if there is any positive momentum, it happens pretty early. First thing and on trade and opening, and then throughout the day, if there's any weakness coming through, it will start to show kind of after 10 or 11 o'clock. So most people trade based on those general trends. Again, that's not something you should bet your portfolio on. Just simply, it's a general trend. But we're seeing actually at night kind of the aftermarket trading being more positive than during the day, where we have a lot more retail traders, selling off as we see more and more economic instability. We're seeing people sell off during the day. So kind of a reverse pattern. Usually night times, after market, when we get the bad news comes out and we see the big downward moves, we're seeing a bit of reversal in that. So interesting trend as we move into the fall economy here. TikTok, always in the news. I'm starting to like this story. It just goes on and on and on. Of course, we talked about TikTok trying to come up with a deal with Oracle and get presidential approval, which they tentatively got. And then the Republicans turned around and said, no, we're going to ban it anyway. But of course, it went to court. Given how quickly the ban was threatened, and they stopped the administration from banning TikTok downloads temporarily anyway. And now also we've got Walmart in the deal, taking a bit of ownership of TikTok alongside with Oracle, giving kind of a majority ownership to US firms of ByteDance, which owns TikTok. So very convoluted deal, constantly changing information out of there. I don't think this is the end of the story, but we'll keep a very close eye on it. We're headed into Q3 of the markets. Of course, they roared in the first half prior to the COVID shutdown. Then we saw the drop at the end of the first quarter, and then we saw them kind of roar back. But now, as we've talked about, those concerns are starting to lay on those market valuations, and we do see that continuing. The World Trade Organization and China and the U.S. Are continuing to battle over the tariffs. They ruled against the U.S. at one point. Now they're coming out as they're being objective and fair. This is the ongoing U.S.-China trade issue. Don't see this cooling down anytime soon, especially with the technology battle that we have going on, with TikTok being at the forefront. So, and Huawei being the other one. We talked last week where China kind of has their blacklist, their list of U.S. companies that they want to blacklist and close down or limit their access to the Chinese market. Should this continue, we haven't seen that list, but China says they have one, so we'll keep an eye on that. Biden and the Democrats are in the Supreme Court. Obviously, the Supreme Court is still in a bit of mess with Ruth Ginsburg passing, and the Republicans looking to push through the new judge for a lot of issues. Obviously, Obamacare, the ability to get rid of Obamacare is in the courts currently, and if they swing the court Republican, that might go their way. And obviously, there's a lot of talk about the Republicans pushing the validity of the election or the outcome of the election to the court as well. So ongoing drama there as we keep a close eye on what's going to happen with that. So as I mentioned, the total cases worldwide were through the million mark. Deaths through the million mark. The total cases, 33,639,000. U.S., where we watch closely, is through 7.3 million, going to 7.4 million cases, 210 total deaths. Really not trending down too much in the U.S. We've seen some spots trending down, but overall, continued impact. And obviously where we've seen success around the world really has been around the mask usage. And when we see states like Florida, which is, just lifted all measures and just kind of gone back to normal, obviously we fully expect to see case increases in those areas. Canada, just quickly approaching the 160,000 total cases mark, still holding at the 92, almost 93,000, 100 death mark in Canada. Still not great. Doing a lot better than a lot of countries. The infection rates have been going up, as I mentioned before. The hospitalization and death rates, though, are holding steady. So some good news behind the second wave that we're seeing here in Canada. So let's take a look at the markets. They were headed higher. We did see some weaknesses today, mostly on the concern of that second wave, and also a bit of concern around how the debate is going to go this evening. As I've mentioned many times, the markets don't like uncertainty. It's a tight race for the presidential election here in the U.S. So we're definitely going to see weakness going into it, just as the market volumes take a step back, waiting to see what the outcome is going to be. Again, not one way or another is going to be better. It's just the markets are going to wait to see what happens. A little bit of weakness in the US dollar. We'll dive into that in currencies. Push gold up. Oil rose a little bit on speculative hope, but again, no fundamental change. We've talked about oil. There's nothing really pushing recovery there. Still think it's a little bit too early for a play. Coming up in the US, we mentioned the consumer confidence index is expected to come out, and the region's expected to rise slightly. And then the housing price index, again, we're looking for an increase there on the July numbers. The Fed Reserve is meeting and having some more meetings. It seems like they're always meeting these days. They are really trying to get a plan in place of how they're going to fight inflation without raising rates too quickly, create jobs in the right areas. So we monitor it very closely to keep an eye on what their plans are and which way that they're leaning. And this week's no different. We'll be looking for that. In the U.S., Uber, not necessarily U.S. news, but Uber got an 18-month license to operate in London. That's after they lost it due to some safety concerns. There's been an ongoing battle between the cabs in London versus Uber, and mainly, obviously Uber has been a disruptor for the taxi industry globally, but particularly in London, where it's a 2-year course to become a cab driver there. You have to pass a very stringent knowledge test of roads and traffic patterns. In fact, if you've never been in a black car or one of the cabs in London, always been so impressed with their ability to know where they're going, know how to avoid traffic at any time of day, any time of year. It is pricey because the cabbies are obviously spend 2 years basically in school to write that test. So Uber coming in with just anybody with a driver's license being able to do that service, obviously at a lot lower cost. There's always been this battle. So a win for Uber to get that 18-month license after it got taken away. And they have to go prove themselves that they can be safer. So some of the drivers who didn't have all that training, I personally would not drive a car in downtown London. So no surprise if you don't have the training experience, it can be difficult. Caesars Casino shoots lower than expected. It's made a bid for UK company William Hill. This is just getting their access to the British bookmaker to try to expand the U.S. betting and online business. So Caesars Casino out of Vegas, they made a $3.7 billion bid. It was kind of expected to come out in a bit higher, but obviously with the current state of the economies, they went in a bit more value. So it looks like that's going to go through. United Airline pilots took some pay cuts and accepted a deal to stave off or avert some layoffs. for about 2,800 people, but that's not the end of it. There's still a lot of talks. There's several thousand other airline employees that could be facing layoffs. Of course, everyone's crossing their fingers, or that industry certainly crossing their fingers, looking for Congress to provide them financial aid to keep the jobs going. In the energy sector, we're still seeing more and more M&A, mergers and acquisitions. So Devon Energy out of the US picking up WPX Energy for their shale assets. So that's your natural gas. So just more consolidation, consolidation, just more efficiency, lower cost, just trying to stay profitable through this lull in the energy sectors. And the FDA, US FDA, is pausing one of the vaccine trials from Inovio's trial. As more and more companies get closer to the vaccine, we're going to see some of them fall off. This one in particular was taking a different approach, where they were injecting genetic material right into the cells, and obviously a different delivery system needs to be devised. So before they let them go ahead, they wanted more information on the delivery device that would make that happen. Johnson & Johnson also progressing with their phase 3 trials on their vaccines, getting some great results, and as they expand more and more people into the testing group. So hopefully by year end or early into the new year, we'll actually have news about a viable vaccine. But again, the real step is going to be the distribution, because there'll be emergency use only up front, and then it'll be frontline workers, so people that are most at risk, and then it'll be people with pre-existing health conditions that make them risk, and then very likely by age groups. So that's where all the experts come up with the mid next year timeline. Canada, no major events kind of on the financial calendar. There's always news coming out every day, but no major events coming up. Some top headlines. Peltz, the billionaire who was on the running as lead advisor to Aurora Cannabis, has stepped down. Just another problem for Aurora, as the cannabis sector in Canada as a whole has been hit really hard. Even before COVID, the cannabis sector was very much struggling for growth, not just in the stock prices, but as an industry as a whole. And this certainly has not helped. We had a little bit of surge up at the beginning, but things have started to fall off again. So Peltz is stepping down from there. Trump is back in the idea of a Canadian railway into Alaska from the oil sands to kind of get some direct access to Alaskan shipping lanes. While President Trump is all for it, that doesn't mean they're going to get that through. Obviously, just seeing the pipeline debates we see in Canada for our own pipelines, to put a rail line through some sensitive environmental areas carrying oil will not just automatically get approved. In fact, you'll probably hit some very, very big hurdles along the way. When we talk about the World Trade Organization with the U.S. and China, well, the U.S. is very active in there. Ongoing case with Canada over our lumber, where the WTO had ruled largely in favor of Canada. Recently, the U.S. is appealing that, which kind of puts that whole situation into a void for a little while they reassess or review that ruling. So, a little bit of trouble for our lumber industry, but it's been there for a while. So we were hoping for it to be cleared up, but no big news there yet. Speaking of cases going on for way too long, Huawei CFO Meng is going back to court to fight her U.S. extradition. You know what? It seems like this. You almost forget this is still happening. Obviously, it's a big issue for Canada-China trade relationships, and it goes back and forth. Obviously, there's a lot of political pressure to make a change there, but it's really not a political decision. It stays in the courts. So we'll have to keep an eye on how that goes as she fights the validity of the U.S. claim. and we should get some news out of that in the next little while. Unifor the local leadership has approved a tentative deal with Ford, which is good news for the automakers. Obviously, the automakers union, which at one point in Canada and the US was one of the most powerful unions. Obviously, 2008, even prior to 2008, we saw that weakening quite a bit as the automakers got into financial trouble. We saw some bankruptcy restructurings through 2008 in the automakers and some bailouts, and that weakened the union quite a bit. So good news, given what's been going on, that there's not a big union battle. They've come to a tentative deal, which will keep things operating, keep people working, and obviously, as we talked about just a moment ago, with the surge in the auto industry, potentially on the manufacturing side, to try to beef up some inventories, keeping those plants open is important. So that's happening here in Canada. On the exchange front, the euro rose. We talked about a little bit stronger markets as the Brexit negotiations and trade deals between the UK and the Eurozone have been progressing anyway. So that goes well. So that has pushed up the euro a little bit stronger, pushing down the US dollar a little bit, down to about 1.16 for the euro to the US. Sterling gained a bit, on that same optimism, with the pound sterling going to 1.28. So probably that's kind of the trend we will see as Brexit continues, as things get a little bit better there. And again, there's some pressure on the US dollar with inflationary pressures and obviously everything that's going on down there. The Canadian dollar currently at 0.7453. So, less than a month ago it was is a 0.765. So we've come off about 2 cents as our dollar's weakened a little bit as well. On the commodity front, crude prices were a bit lower in Europe, a little bit higher in the US. Not anything substantial. Again, no real movement in that area. We'll stay up to date on it, but again, we don't expect too much there. Gold ticked a bit higher again on inflationary and concerns around the U.S. economy and U.S. dollars. Other metals, copper slipped a little bit. So copper is a big on the outlook of construction and growth. So that's come down a little bit. Lead and tin also moving a little bit to the upside. Aluminum down. Nickel's the one really kind of when I started looking into this, I want to put it into our weekly updates. Nickel was off a little bit, but nickel prices should actually be tracking up a little. It's used quite a bit in the electrical vehicles. Obviously, Tesla's got a very intensive outlook for EVs. California actually looking at getting rid of or phasing out gas vehicles and move into EV and hydrogen. So, keeping a close eye on the metals used in those batteries, which is copper is also one of them, to see how they move. And we should see that continue to move up in 2020 and into 2021. So with that, let's talk about taxes. We generally don't turn our minds to taxes to, potentially year end or even in the new year when we go to fill in the taxes. And that sometimes it's a little late to put any strategies into place. So I wanted to get people to start to think about taxes and maybe think about taxes, which almost seems less depressing than looking at U.S. news these days. So take our mind off the U.S. election a little bit, take a look at taxation, and see what we can do before year end to make sure that we've got all our bases covered. So a few things to keep in mind, CERB. So the Canadian benefits for people who lost their jobs, or some companies that went to the Canadian government for help. Keep in mind, so if you know anybody, if you yourself took any benefits through those programs, keep in mind no tax was withheld. So at the end of the year, you're going to owe taxes on that money. So having the money aside for that, or being prepared for that tax hit, at the end of the day, most people aren't used to income coming in without taxes being withheld. So definitely keep that in mind before year end. You have to have some money aside. You can definitely go in. There's tax calculators out there that can help you kind of estimate what you might owe. But you know, keep that lumen bill in mind. So something really quick to keep at the forefront if you've taken advantage of that, or anybody you know who's taken advantage of that. The other thing from the throne speech that came out, which I thought was really great, especially for retired seniors or maybe younger individuals, people with much simpler tax returns. It almost seemed like every year, you know, you had to either, you know, go do your tax return, you had to maybe buy a software, pay an accountant. You know, myself, I have two teenage boys who work, and you know, their tax returns are so simple because, you know, they have a T4. They have their personal tax exemptions, which covers most of their T4 because they only work part-time, summer jobs. You know, but it still costs, you know, $19, $20 for them to file, and you know, even more expensive if you have multiple receipts. So one of the things throne speeches come out is to say, you know, CRA has all that information. Basically, the exercise that they've made us do is, here, you go out and tell us how much you owe us and send that in to us. And it's kind of like, well, you already know how much I owe you because you already have all this information. And, you know, their attitude's kind of, yeah, but you tell us and we'll tell you if you're right. You know, they're looking at turning that around, which I think is a great idea. So for people with, you know, very simple, you know, that you don't have any business tax deductions or employment tax deductions, you just have your simple kind of T4, you pay your taxes, maybe you have an RSP, you know, they have all that information. So now they're just going to send you, hey, this is what you owe. And if you don't think that that's what you owe, then you can file to change that. So obviously a much simplified process, cheaper process for a lot of people, and streamlines things. So I thought that was a great outcome or a comment from the throne speech, and be good for a lot of people out there who have, you know, don't have a really complicated tax return. Okay, so move on. Tax loss selling. So you might have heard this strategy. Often will come up in kind of November, December, you know, last minute strategy. But really, I would take a look at, you know, if you don't have someone looking at your portfolios, we do this for clients. You know, really look into the portfolio and say, is there any losses in there that we should sell and take that loss? Because if you sell something at a loss, that's a capital loss you can claim on your tax return, of course, against your capital gains. And it doesn't mean your portfolio is necessarily negative. You might just have a couple of dogs in there, or maybe you've got a position that's just not performing right now and you don't expect it to perform for the next month or so. Sell it off. Remember, there's a superficial loss rule where you have to have sold it for at least 30 days before buying it back. Otherwise, the loss doesn't crystallize. So keep that in mind. You do have to be out of the position for 30 days. Doesn't mean you can't go buy a proxy. You know, if you sell Pembina Pipeline at a loss, but then you go buy TransCanada Pipeline, which is kind of, you know, the same sector, same country, they might act the same. That crystallizes things. But start taking a look at the portfolio, see if there's any opportunities to crystallize some losses to offset some of your better positions from a tax perspective. Even if you don't have any capital gains or carry forward or capital gains this year that you're going to trigger, those losses carry forward for you forever. So you might have gains next year, the year after. That really important to put those losses in place. If you are looking at contributing to an RSP or to your TFSA or to your savings goal, look at it early. We did mention, you know, we expect fall to be pretty bumpy as far as the investments go. That's buy-in opportunity. So having the cash in there is worthwhile. Sooner than later, we generally, January and February, March are your stronger months. So having your investments in during volatility is better than when it starts to ramp up again. If you're looking at real estate investments, you know, as I mentioned, a lot of people are shifting, you know, whether they're going to buy some investment property or they're looking at vacation or moving to a new area. Really take a look, you know, should you own it personally? Should you incorporate it? You know, just really think it through, unless it's your principal residence, which is of course tax exempt. If it's any secondary properties, really put some thought into it before you go out and buy it. Charitable donations, another great idea. If you're doing charitable donations, there's so many great organizations out there right now that need help. Whether it's the food banks, helping people who have lost obviously the charitable organizations are being overwhelmed by people who have been hit hard by the economy and the close downs. So if you're looking at doing charitable donations, keep in mind that if you have an investment, so let's say a stock that is gone up in value, and you have a capital gain sit in there, if you wanted to sell it, you're going to trigger that capital gain and that tax. But instead of giving cash out of your bank account for the charitable donation, you can contribute that investment and you are exempt from the capital gain on it. The charity doesn't pay it either. They're exempt from it. So if you put 5,000 to a stock and it grew to 10,000, and you want to donate 10,000 to a charity, or even a portion of that, if you give the 10,000, you don't pay the capital gain on that investment. So you save that the tax on that $5,000 gain, but you get a receipt for $10,000. So you get to write that off your other income. So not only did you save the tax on the capital gain, but you're saving the money on, or taxes on other income, having that deduction. So keep that in mind. I know we've covered it in more detail. In fact, we cover a lot more of this in detail in other pure tax presentations. Obviously, you can't go through that whole hour or two today, but just keep it in mind. If you are looking at doing some charitable donations this year, really look at your portfolio. Even if you put the 10,000 in stock into the charity and replace it with 10,000 cash, you've saved that tax. So it's a worthwhile strategy. If you operate in a business, crystallize some of your business losses, you might have seen a slowdown in the company. You might have seen a devaluation of the company. Even though if that's temporary, you can crystallize some of those things for future estate plan. Take advantage of the lower value you have out there, lock that in, which will be a smaller tax bill for you down the road. Review your income for 2020. Some people haven't taken as much income this year just because maybe they haven't worked as much, or if you're retired, you haven't pulled as much out of savings. We haven't been traveling, obviously not, going out as often. So if your income's lower this year, you might want to look at triggering some capital gains or taking some money out of your RIFs or RSPs, even though you don't need it. But if you can take it out in a lower tax bracket and then park it maybe in a TFSA or somewhere where it's a bit more sheltered, and access it in a future year when your income might be higher, it's a good year to really review your total income for the year and see if it's lower, to see if you want to take advantage of that. We try to do that every year with our clients, just as a matter of process. But this year, obviously, if your income is lower, it might be a year to take a closer look at that. Are you a U.S. person? Be really careful of the IRS. And when I say U.S. person, obviously, if you're a U.S. citizen, you're a U.S. person, which means you should and obviously are filing U.S. taxes every single year, even if you don't have any earned income in the U.S. But keep in mind, you can be considered a U.S. person even though you don't have, or you don't have a U.S. citizenship. You could be a U.S. person if you're married to a U.S. person. You could be a U.S. person if you own property in the United States. If you have any, certainly if you rent that property in the United States, and also snowbirds. If you're going down to the United States, there is a calculation that goes over 3 years to figure out if you're considered a U.S. person or not, or if you're substantially in the United States or not. So you can get caught in those numbers. This year in 2020, there is a bit of an exemption for snowbirds that might have been caught down there for an extended period of time. You are given a credit for, I think it's up to 30 days to take off of that equation. So it might not be, to prevent you from going into that status, but be very cautious. In fact, we just did this week, I think it went, last week on Wednesday, we did a deep dive with Rebecca Heck from CI into all the different strategies and things you should look at if you are a U.S. person. And it goes through all the different criteria that might make you a U.S. person. And as I mentioned, if you do own property in the U.S., you can be caught in this, not just in as a U.S. person for tax filing and reporting, but also for your estate. So I recommend you go check out that video. You can find that at mikeonmoney.com. Go there and check that out. Also, just keep in mind, if you are in that category of U.S. person, or you have a property in the United States, there is a gift tax for gifting people, especially if those people you're gifting are living in the United States. Be very careful of those rules. And again, we cover all that in that video, so go check that out. And the last thing I want to talk about on the tax front is obviously the working at home deductions. You can claim part of your home workspace as a tax deduction if you worked at home for any period of time. And obviously most of us have, who are still out there working. So really important to look into those rules, get some professional advice. There are pros and cons to what you claim there, because now your principal residence tax exemption does get affected slightly, depending on how much space you claim as working from home. Obviously, if you have a 4,000 square foot house and you're using 200 square feet of it, you're claiming, not going to affect it too much. But if you're running the next Amazon out of your garage and a couple of bedrooms, and you're claiming, half your square footage, it is going to affect your capital depreciation. It is going to affect that tax exemption to some extent. So get some advice, see if it's worth it. Maybe it is, but always be aware of potential effects of doing that. So obviously, a lot of us out there have worked at home. There are deductions available to take advantage of, and CRA is actually talking about coming out with some more generous deductions for 2020 specifically, maybe carrying forward, given the situation this year. So we'll keep an eye on any news they put out around that. But keep that in mind if you want to start getting the measuring tape out, figuring out your home office space square footage compared to your total square footage. So with that, I'm going to let everyone go and enjoy our sunny day. We finally got the sun back after last week. Hopefully we can hold on to summer for a little bit. As always, great to talk to you. I look forward to talking to you again next week. We will have a video out later this week, probably going to be focused on the throne speech, given some details, what details were given and what promises were made. Obviously, not all the promises had too many details behind it, but we'll highlight some key things that we saw on that. We'll get that out to you by Friday. As always, mikeonmoney.com if you want to see any of our videos, or reach out to us. And with that, enjoy your Tuesday. We'll talk to you again soon. Thank you.